So it is a midterm elections week, and I wanted to go through a bit of a risk management note here with you today. So one of the things that we've been talking to clients about over the past week and a half or so is to really go to the sidelines from a trading perspective. What I see is that a lot of people in the markets that are trying to generate money over whatever that is, maybe the course of a month or a quarter or a year, they're taking a lot of excessive risk. And one of the easiest way to eliminate that excessive risk is to stop holding trades, and I mean trades, through known unknowns. For example, an election such as we have the midterms this week, November 6, 2018, is a known unknown. In other words, we know the event, we don't know the outcome. Or at least most people don't know the outcome probably. Or some people think they know the outcome, they really don't either. So it's important to understand that holding trades, and again, trades by my definition are a few days to a few weeks, maybe even a few months. Holding trades through those kind of things, including earnings reports, is a really losing proposition over time. What you want to do is once you see the result come out, then you might be able to position yourself. And so more specifically, what we've been talking to clients about is that we're probably not going to do any trading until this week on Wednesday, November 7th. Why? Because we want to give the market some time to react to the news and then see if we can position. So a lot of times this is the patience game that most people at home are not willing to play. Even a lot of institutional investors that are more active, they're not willing to be patient, which ultimately comes back and really hurts them. So to give you an idea where we are here, just because everyone always wants to see a chart, I'm going to just kind of relate this back to the S&P 500. Not that the world is S&P 500 centric, but it does kind of give us a little bit of an idea of where we are. So we've been talking about this and walking you and of course our clients in real time through all this over the past few weeks or so, 4, 5, 6 weeks or so. And this is the S&P as represented by the SPY ETF. Let me get that over a little bit. And obviously we've kind of broken this trend, but it really hasn't been so bad. We've rebounded. We had a nice weekly bullish close last week. And so we're kind of retesting this major support line dating back to the lows of 2016. So the question, of course, becomes how much lower do we go, or was this the low? And for those of you guys that have been following us, and this again is one of our major themes for our paying clients, clubhouse members, advisory clients, all that kind of stuff, coaching clients, we are operating through the lens of investment themes. So one of the things that we're looking at right now is we've been de-risking all year. And so we've been relatively long things like utilities and staples, which has been a huge help, and actually short things like momentum stocks and large cap tech, which we continue to be underweight. But now the question becomes when do you start buying for a potential year-end rally? And so that's one of the things, one of the active discussions we have. But I think right now, before we position for that more meaningfully, for a potential of a year-end rally, I should say, because we never know we're going to get one, but the odds usually are really good. We want to get through the midterms. So really the point of the video is to make sure you don't open trades ahead of the elections thinking that you can have some sort of a crystal ball to take advantage of the move after. So what that means for us right now is exercise patience, really sit in our hands. I'm trying not to even look at the computer in terms of the markets because it just doesn't matter that much. We will look at it again maybe later on in the day on Tuesday, November 6th, which is today, or of course overnight and into November 7th. So the patience game is important. You got to be patient when it comes to trading and investing. A lot of people think they're going to miss out on opportunity, but like an old mentor used to tell me that an opportunity is easier found again than it is to make up a loss, right? And so I want you to really think about that for a minute. That reward chasing ultimately is a really bad way of trading. So anyway, folks, I hope this makes sense. Have a wonderful week, and I'll talk to you guys once the midterm elections results are out.